Okay, ChatGPT. I'm sharing with you the plot now. I'm wondering if you can give me a really brief one-sentence overview of what you see.
The plot displays smoothed average, minimum, and maximum temperatures throughout 2018, with a notable annotation marking a big rainfall event in late September.
Fantastic. I have another question for you. Which months do you see the hottest temperatures, and roughly what temperatures do those correspond to?
The hottest temperatures occur around July and August. The maximum temperature during these months is roughly between 25 degrees and 30 degrees, 77 degrees Fahrenheit to 86 degrees Fahrenheit.
Okay, that was a demo of OpenAI launching a faster and cheaper version of the AI model that underpins its chatbot, ChatGPT. This was GPT-4.0. It is a model that includes and responds more quickly, they say, to text, audio and visual inputs as well. So a pretty significant move coming through from OpenAI. They are, of course, facing more competition from the likes of Cohere, based in the US and Canada, but also Llama of Meta and Google DeepMind as well. But a really interesting update coming through from OpenAI. Staying on the tech space, by the way, it's a big day in terms of the earnings coming through from China, and you're seeing moves around these stocks already. Tencent and Alibaba. Let's start with Tencent then, because to focus on this company is to focus on the financial services part of this company, particularly through its WeChat app, but also the gaming and the advertising revenue. Of course, it is a gauge on the health of the Chinese consumer as well. And some of the estimates coming through in terms of the revenue, operating profit, 45 billion yuan. It could be challenged again, but again, really focusing on the gaming pipeline. You've seen a bit of an ease back in terms of the crackdown there from regulators. That may come through as a benefit for Tencent, but also financial services and advertising. When it comes to Alibaba, this is a company that is facing some headwinds of its own as well. The idea that it was going to restructure, spin off a lot of assets, that's been reworked, changes at the top in terms of executives. But again, in terms of the e-commerce business, a real touch point in terms of the sentiment around the Chinese consumer. And then it's got its cloud division as well. So look at those two areas. It may also announce some news around further consolidation around its core businesses as well. So there's some of the previews in terms of the estimates coming through from Alibaba. Again, Tencent and Alibaba are really central in terms of the tech story that is coming through from China and across Asia as well. The meme stock vibe is back. By the way, if you notice this, GameStop, Roaring Kitty is back, or at least that is the speculation, putting out a tweet, and you saw GameStop and other meme stocks just soaring yesterday to levels we haven't seen since about early 2021, when the likes of GameStop rallied, what, 1,000% or something like that? Very close to that, at least. So that is another factor that's at play. A bit of FOMO coming back. Roaring Kitty sparking that speculation. It's a story we'll be across, of course, this week and today as well. Plenty more coming up. The Qatar Economic Forum, of course, in Doha. We'll bring you some highlights of that event and the key conversations through today, including the Malaysian PM, HSBC CEO, and the President and CEO, Franklin Templeton. Markets Today, though, is next. Stay with us. This is Bloomberg.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well, because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
This is Bloomberg. Good morning from London. This is Bloomberg Markets Today. I'm Anna Edwards alongside Guy Johnson and Tom McKenzie. With the cash trade just less than an hour away, here's what you need to know. US and European futures trade sideways as markets look ahead to data on America's producer prices. Fed Chair Jay Powell speaks later today. Anglo-American tells BHP it needs to dig deeper as it rejects a second takeover approach from its rival. And French President Emmanuel Macron tells Bloomberg he's open to seeing a major French bank acquired by an EU rival to boost financial integration. He spoke exclusively to our editor-in-chief, John Micklethwaite.
This is a totally new world, and we do need this new business model for the Europeans. More innovation, more investment.
Okay, let's check in on these markets. A big day in terms of the data, of course. We'll be unpacking that for you. European futures, though, currently edging lower, just by 0.1%. FTSE 100 here in the UK pointing low by 0.2%. 448 on your US benchmark 10-year, and euro dollar at 107. The single currency currently unchanged. Markets today starts right now.
Tuesday the 14th, good morning, welcome to the show everybody. It is a day in terms of the data of waiting, basically. We await the PPI data out of the United States, we await Powell in Amsterdam, we wait for the NFIB data to come through as well. As we wait, though, we have plenty of things that we can be discussing. Clearly, the GameStop story is back. We're going to be talking about that a little bit later on in the program. But while we wait for all of the stuff to come out of America, we have plenty of stuff to talk about from our side of the Atlantic. We get data out of the UK in terms of what is happening with wages, which are holding up quite nicely. And we get news out of Anglo-American. We've been waiting for the update in terms of the pushback to BHP, and the strategy that we are talking about here involves significant divestments.
Yes, it does. Lots of divestments. Let's just go through them. Anglo-American Platinum to be demerged. They're planning lots of structural changes then. De Beers to be divested or demerged. Steelmaking coal to be divested. Exploring options for nickel. Amplats to be demerged. This is really fascinating because one of the reasons that they didn't want to accept the offer that BHP gave them, and this was the second offer that BHP gave, was because of all the preconditions around divesting lots of businesses, and it seemed as if the BHP offer wanted Anglo to take the risk, whereas BHP would just come in and then consolidate the whole business. But here we've got Anglo fighting back in a sense, creating showing this is how we can create shareholder value, but doing a lot of the things that were required of it in that BHP offer.
I wonder how the South Africans are going to be reacting to this. This is a lot of the businesses that are being demerged are based in South Africa. How will the South African authorities feel about this? And what does BHP now do in terms of sweetening an offer? How does it make this work if this is the plan that's already on the table? Be interesting to hear what Elliott has to say as well on the back of this. They've been inserting themselves. Everybody's in Miami, apparently, for this big the Bank of America conference that is taking place, all these guys are in the same place, which is going to be a fascinating cocktail.
Yeah.
I use the word cocktail advisedly.
Yes.
Okay, well, it's a Tuesday.
It's Miami.
Early on Tuesday morning, it's Miami, so maybe reach for one.
Yeah.
But this has been the narrative up until these lines are dropped, was that Anglo was very resistant to these structural changes because of the complexities. They've come through. They were forced, of course, compelled to speed up their review of the business because of this offer from BHP. This is what's come through. So really potential significant implications. De Beers, of course, the diamond part of this business, to be divested or demerged, as Anna, you were saying. BHP coming through with that premium on that increase in terms of the offer.
Yeah.
And so far, this is a response from Anglo American. So this is a really consequential update in terms of this story. But one senses this is not the end of the story.
And just to think, we're going to link to UK jobs, so I want to mention a UK angle on this. UK listed, of course, Anglo-American, to slow investment in Woodsmith and no Woodsmith capex in 2026. I think that's the fertiliser business in the UK, so that is something we'll continue to watch. But does this, the fact that they're going about this structural activity, does this invite another offer from BHP? Or is this enough for the likes of Elliott on a standalone basis? Will they say, OK, we don't need BHP because Anglo's got it in hand, it's doing this stuff itself?
And all of this, in some ways, is about copper as well. This is about the copper business. Look at what is happening with copper right now. The incentive to get this deal done is even greater as copper continues to rise, despite the fact that the Chinese are actually putting metal back onto the market. The price continues to rise, which tells you about the underlying reason, the kind of the jewel in the crown. All of the rest of this stuff can be shared, and yet there is still significant value potentially in this business as well, which I think is fascinating. Let's talk about this labour data out of the UK, because again, also I think this is really interesting, and I think poses a problem for the Bank of England.
Yes, so let's just go through some of the numbers. So average weekly earnings, because of course we're watching wage data as well as the unemployment data. The wages number, if you've got the bonuses included, you've gone up from 5.6 to 5.7%. If you take out the bonuses, you're actually static at 6% versus the prior period. But higher than expected.
But static is the important bit. This is a number that's been coming down really quite sharply
and it's historically high still at 6%.
But if we stabilise, if the rate of change, i.e. if wages hold up, we've had very high wages, the rate of growth has been enormous, it's come down slightly. If it now stabilises at this relatively high level, that is going to make getting back to targets slightly more difficult for the Bank of England. How many times can the Bank of England go if this data holds up?
And the number, again, 5.7% in terms of average weekly earnings. The survey, 5.5%. So you expected to see a softening from the previous month. You didn't got a tick up, to your point. And then in terms of the unemployment rate, 4.3%, that was in line. So that's where you met estimates, the unemployment rate, 4.3%. Obviously, relatively low level of unemployment still. The tie and the linkages between these higher wages and the services component of inflation is going to be interesting, isn't it? Because we know that services in the US and here in the UK has been stickier.
Yes.
If you have these still higher wages, how much of a floor does that put under the services part of the inflation mix, to your point, around the challenge for the BOE?
I mean, Bloomberg Economics, just in the inflation picture overall, expects inflation to be down at 2% very soon. So they are expecting, because of a lot of the things you mentioned the other day about, energy prices and things that we already know about. There is a bit of visibility there. And the pound doing a whole lot of nothing, I should point out, on these numbers. 125.60. Yeah.
The other thing that's probably worth folding in is that we have had an increase in April in the minimum wage, which some people will have front run. And as a result of which this may be complicating the data and certainly will complicate these numbers for the next few months. So it's going to be quite hard to read what is happening with wages as a result of that.
I saw a story the other day that made me think of you, Guy, because you like to talk about how this data, and many do, it's been incomplete and not as useful as it should be in terms of the unemployment rate in particular. And one of the issues, not just here but in the US as well, was getting Gen Zs to participate more in surveys. Apparently those born after 1997 not so keen to participate in some of these labour force surveys. And so what they've done, is, according to our reporting, is they provided increased monetary incentives. It's you just pay them.
Yeah, we didn't get paid for surveys.
Show them the cash.
Is that what's showing up in the wage data?
Yeah, maybe. The ONS is helping this problem, or not helping, as the case may be.
It looks like in the inflation data, just switching focus to Germany, because everything we touched the inflation data out of Germany as well, bang in line, essentially, with the estimates, and probably doesn't do much in terms of changing the view that the ECB. This is the final read, 2.2% CPI year on year. That's for April, 2.2%. The survey was exactly that, month on month, an increase of 0.5%. Again, in line with the estimates. Probably doesn't do anything to change the view that June is the month for the ECB.
This is great. So we've got lots of things to talk about as we wait for PPI data to come out a little bit later on, and PPI and CPI tomorrow. And we've got the NFIB. Powell's in Amsterdam today talking to Klaus Knott on stage. So I think that's around 4 p.m. local time, 3 p.m. here in the UK. So actually, as we work our way through the afternoon, we've got lots to think about later on.
A lot of the action on the US economy has been here, hasn't it? In Europe. We've got, as you say, Jerome Powell here in Europe. We saw David Solomon from Goldman and others at that Paris Invest conference. And I know that the Goldman line was that the US economy, you know, things feel good. So there is a lot of positivity around.
So actually, I thought that the really interesting line came out of Brian Moynihan talking because they have a lot of data that they can use in terms of the credit card stuff that they are seeing. And he was saying, actually, he felt that the consumer was in really good shape, even relative to a few years ago when checks were being dished out left, right and centre. He feels that the consumer's in still quite good shape. And that's fascinating, because we're going to get retail sales data a little bit later on this week. And there's been this fear that higher inflation is effectively going to dampen that consumer spending trend. He's saying, actually, the consumer looks like it's in really good shape.
Account balances, he says, are looking pretty healthy, healthier than they were in 2019, and delinquencies are kind of at 2019 levels, which were seen back in 2019 as a relatively good credit picture in terms of the uptick. And he says that, in fact, has kind of stabilised. To your point, he's really painting a picture of a still resilient US consumer on a week when we get the retail sales.
And what's the impact of that very strong US consumer or resilient US consumer and strength in US data? What's the impact on that on Fed expectations? Because 2/3 of our guests, we have 3 guests you know, for us to talk to during the programme about these macro things, and 2 of them are expecting no cuts this year from the Fed.
I read the first one, I was like, OK, no cuts, fine. Then I read another one, no cuts, OK, right.
Something's building here.
Something, but so has the pendulum swung too far? So that's the question, I think, going into this data set. You've seen yields come down quite a lot over the last kind of couple of weeks. Is there the danger we get a slightly hotter print and the market really reacts? Everything is so volatile right now. Everything's whipping around all over the place. We're getting corporate numbers that are sending big kind of tech stocks all over the place, 9, 10, 11% moves on the day. And then you come to GameStop. And
finally, you were crafting a nice link
at some point.
Your Roaring Kitty T-shirt somewhere.
Of course, yeah. Actually, I rewatched the Dumb Money trailer this morning just to kind of reacquaint myself with the vibe. So that narrative is back, which I think which again comes back to this kind of consumer story as well, which I find fascinating. That FOMO narrative is still exists.
John Orford says it won't be 2021 again. We won't have the same frenzy around the likes of GameStop and other cinema movie chains.
Kind of reining in Guy's enthusiasm.
I'm sorry, I hate to do it, but I mean, money's not as cheap as it was, is the obvious point to make, I suppose. But also he was talking about the level of shorting that had been the case going into it in 2021. These stocks were 140% short.
Yeah, they went after Gabe Botkin in a big way.
Right, exactly.
And he got burnt pretty badly, and so everybody's being much. I suspect the stops are more carefully managed this time.
And the shorts are less than 30%. They're 24, 25% versus the 140.
And you'd be really careful with those shorts. You'd be covering them really quickly. And I suspect there was an element of that in there as well yesterday, in terms of some of the managers are going to be going, we're at this again. I need to cover my shorts, I need to buy some stock, and therefore you probably get that building into the rally that we saw yesterday. But it's called, I think, overnight, it was still moving higher.
There we go. That was the move yesterday, wasn't it? And still gives us something to talk about. So thanks, Roaring Kitty, for that and your artwork. Let's move on.
Forward.
Let's move on. Yes, lean in. Let's move on to French politics or European politics and banks. So should we start with banks then? Lots of lines coming out from John Micklethwaite's interview with Emmanuel Macron. But bank consolidation, very laid back about it being cross-border.
How do you feel if you're a French banker this morning? If you're running BNP or Soc Gen this morning, I'm like, have you got my back? Have you not got my back? Kind of, how do I feel about it this morning? Because he certainly basically set up the French banks to be taken over.
And the point that John made to him in phrasing that question was BNP, probably the most successful European bank, and in terms of market cap, about 80 billion compared to, what, half a trillion or something for its US counterparts. And the way he phrased it, for example, and he switched focus to Soc Gen, in terms of banking consolidation, would you be comfortable with, for example, Santander coming and making a bid for Soc Gen? And Macron essentially said, yes, I'd be comfortable with that because it has to go either way. And we need that consolidation.
I suspect he secretly would be much happier if it's the other way around. He's kind of, you feel as if he's got to say this to keep the momentum behind his push.
He's a big fan. Banking union, capital markets union.
Capital markets union, banking union. The banking union bit is the bit that we're missing at the moment.
Yes.
And that really needs, if any of this is going to happen.
Yes, I mean, he said banking union is on track, but we still don't have joint deposit issuance. We don't have joint deposit issuance, which apparently is one of the big sticking points that Germany is holding up on.
Which track is that on? That's a very slow train.
And he was confident, though, that they would find common ground with Germany on capital markets union. But I thought it was interesting, you know, whether joint issuance is any part of that CMU conversation is a real point of contention, because the Germans keep saying CMU doesn't mean we have to issue joint debt. And Lindner was out on the tape just yesterday saying that in the run-up to this conversation. So that's very much the view in Germany, and it seems that the French have a different view. Lots more common budget talk, trillions more, in fact, $1 trillion more, according to Emmanuel Macron, and we'll bring you more of that conversation a little bit later on in the programme. Here's what else we're looking out for today. 10 a.m. UK time, we get Germany's May ZEW survey, that important survey of German sentiment. We'll get at 11 a.m. Alibaba Q4 earnings. We've got a few really important Chinese businesses to watch out for today. 4 p.m. UK time, New York Fed household credit and debt reports, OPEC monthly report later, EU finance ministers meeting in Brussels, Qatar Economic Forum, of course, beginning in Doha. More on that shortly. And finally, central bank policymakers from the ECB, the BOE and the Fed will all be speaking at events throughout the day. And we talked about how Jerome Powell is going to be speaking in Europe.
Yep, looking forward to that conversation. I think it's going to be on Live Go, so make sure you tune into that a little bit later on. I would urge you as well maybe to keep an eye on what's happening with the NFIB survey. That's always an interesting insight into what is happening with the American economy. One thing that Anna mentioned that we should probably focus on a little bit more, the Qatar Economic Forum. Bloomberg is powering this event. It starts in Doha today. On the show, we're going to be hearing from the Qatari Prime Minister, Poland's President. Other highlights include the Malaysian Prime Minister, we've got the HSBC CEO, we've got the President and CEO, Franklin Templeton. It is a fantastic lineup. We're going to bring you the best of all of those great conversations. Up next, also, we're going to be talking about the big data. We've got PPI today, CPI tomorrow. We need to focus on what is happening with inflation and how the market is set up going into those key numbers. IB plus BBTV Go. It's a bit of a mouthful, but it's easy to use. Join the conversation. We'd be delighted to hear from you this morning. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit Search Go to find answers now.
From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The level of debt in the United States, the level of spending is something that we need a sharper focus on and more dialogue around than what we've seen. We obviously had a pandemic. We made a bunch of decisions, in that pandemic, but we're long out of that pandemic, and the spending levels, are continuing at a pace that I think is raising our debt level and creating issues for us down the road.
Goldman Sachs CEO, of course, David Solomon, speaking exclusively to Bloomberg from the Palace of Versailles. Some earnings crossing from Hon Hai, of course, the contract equipment maker for Apple and others, but that is their biggest customer, of course, listed in Taiwan. It's a miss in terms of net income for the first quarter. Hon Hai, also known as Foxconn, missing in terms of net income in the first quarter. Net income coming in at 22 billion Taiwanese dollars. The estimates had been for 29 billion. So a pretty significant miss in terms of net income. Operating profit just coming in slightly above the estimates. Again, there could be a read across to Apple on the back of this miss when it comes to the net income from Hon Hai, the equipment maker, of course, making the vast majority of Apple's iPhones and iPads.
OK, we'll keep an eye on that as we get close to the US session. Let's pivot back to the macro themes, though. Marilyn Watson joins us, head of global fundamental fixed income strategy at BlackRock. Marilyn, very nice to have you with us. We were just listening to David Solomon from Goldman Sachs talking about elements of the US economy more broadly. We started the programme talking about, the continuing signs of exceptionalism, I suppose, around the US economic story, although arguably other areas turning a better corner. In terms of that US growth story, we've got a couple of guests coming up later on in the programme who both think that there won't be any cuts from the Fed as a result this year. But you do still see cuts ahead, do you?
We still think that there's a strong possibility that maybe cuts later on in the year. Obviously, we've seen incredible data really coming out of the US in terms of the labour market, economic activity. Everything is much stronger than the market certainly expected last year when the talk was around what kind of landing we would get. And I think it's proven itself to be very resilient. That being said, we are seeing signs of a gradual weakening or normalisation in the US economy, whether it's in the labour market. Inflation is also certainly having an impact, particularly on the lower income households and certain cyclical sectors. So we are seeing, I would say, a gradual normalisation. That being said, obviously inflation is still, above the Fed's target. So CPI, I know, is the huge focus for this week. But, I think there's a lot more data to come. There's a lot of the year yet left to come. And so we do think it's, still possible that the Fed may, eventually cut this year. OK,
and on that, the data that's still due, and we do get that inflation print, as you referenced, well, PPI today, but CPI crucially tomorrow.
Yes, yeah.
And a lot of guests in the first quarter of the year were sort of dismissing the first quarter of higher than expected inflation prints and saying, well, that was the first quarter. We expect something much more moderated and things to moderate in the second quarter. So that puts some extra pressure, I suppose, on this data print, because this will be our first glimpse at Q2. What role will this data play, do you think?
I think it plays a key role, particularly, we had the FOMC last week, and they really tried to dampen down any expectations of a rate hike. So that's sort of come out of the market quite a lot. But I think the inflation data is now key, because the Fed has made it crystal clear that it's very, very data dependent. It has a dual mandate of price stability and also growth, and particularly obviously focusing on the labour market. And so I think in terms of inflation, the Fed is very keenly focused on that right now. This week, we pretty much in line with consensus. We expect core and headline to come down a little bit. But, there are a lot of risks around that. The risks are potentially to the upside, particularly maybe in the services area. But I think now the data is really key. And I think the next several tranches of data that we get, which will also then obviously show what the PCE will be, what the Fed focuses on, I think is critical.
Consensus is an interesting word. the consensus is becoming more difficult to nail down, I think, at the moment. The market's becoming certainly more polarized in its view on what happens next. Anna was referencing kind of 2 guests think no cuts, some guests think we're still going to get 3 cuts maybe later on this year as the Fed goes quickly. What does that tell us about kind of where we are in the cycle? Because we've come a long way very quickly. The amplitude of some of the moves has been really quite enormous. How hard is it to be active in this market at the moment? How hard is it to have a clear view as to what is going to happen next?
Yeah, I mean, I think that's exactly right. We've seen some huge moves as we saw basically the economy calibrate from COVID and all the stimulus that we had then, amazing growth obviously coming out of COVID, and now it's much more finely calibrated. And I think now, in terms of investment, actually it's a great environment for fixed income. If you look at the yields, if you look at the carry, with very little duration risk, I think it's a fantastic opportunity to actually put money to work and actually get the income that you're looking for.
So where do you take duration risk and where do you not take duration risk? Because it seems like in the States that the story is much more difficult to read. Is it easier to read elsewhere? Is it easier to take duration risk outside of the States than inside of the States?
In many ways, and in the US, there's no need to take the duration risk.
Yeah.
You know, there's absolutely no need. You're not rewarded for it in the front end, very little duration. You know, makes sense anyway in terms of the value that you're getting, and you don't need the risk. If you're looking outside of the US, then I think in Europe, it seems to be quite a bit clearer. I think, you know, we expect that the ECB will cut in June. They've signposted that pretty heavily, so it would be a big surprise if they don't. So I think in Europe, and then after that, I think it will again be more gradual because globally, you know, data is actually generally better than was expected. But I think also taking duration risk elsewhere, we have an overweight position in the UK, for example, at the moment. We think that the Bank of England will certainly cut rates this year, potentially in the summer as well. So I think outside of the States, it's a little bit clearer. And it's just when you're looking at the States, I think it's just, as I say, the data is now being so keenly watched and the economy is still you know, running pretty hot. So I think the environment in the States of sort of looking at higher for longer, I think, is still definitely persisting there.
What's your level of conviction around that overweight on UK gilts?
So we have a pretty decent conviction. I mean, we really think that the Bank of England is going to cut rates this summer, and they will, you know, continue to gradually cut rates as well. I mean, the UK is certainly not in the same position as the States when you look at the overall economy. You know, we got the labour market data out, which is, you know, gradually, I guess, weakening a little bit, also in terms of wages and other things. You know, inflation is coming down at quite a decent pace, you know, as well. I mean, obviously, the economy is doing better.
So the wage data, the unemployment data out today doesn't challenge that view?
No, it doesn't challenge our view that we think the economy is still, you know, gradually weakening, and that we do expect the Bank of England to still, you know, cut rates at some point this year. We saw, you know, the last vote, we had a 7-2 split. 2 people were actually voting for a cut. And we think, again, now the axe is much more towards when will the Bank of England cut rather than will it cut at all.
OK, Marilyn, thank you very much indeed. Marilyn Watson, Head of Global Fundamental Fixed Income Strategy at BlackRock. Coming up, more from our exclusive interview with the French President, Emmanuel Macron, as he calls for greater financial integration within the European Union. That is next. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. The top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices. They all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
We have to completely reset our model. I think now France clearly is one of the leading economy. We are number one in attractiveness. We've been number one during the past 5 years. And if you take job creation, growth, we are one or second in the Eurozone.
Do you think you're being held,
this is my point.
back by the...
We are here. Now when I take Europe, and especially the EU as a whole, but it's true as well for UK, we have this issue in terms of business model. Why? Because we had low-cost energy thanks to Russia, production thanks to Central and Eastern European countries with quite low costs, a market for exports, China, and a geopolitical umbrella, US. These pillars are being completely revised, totally.
Yes.
And it's no more valid. So we have to reinvent. What and how? By creating much more value on our own, by being much more innovative, by creating much more jobs and jobs with value, good jobs, I would say, on our continent. The key point is deliver much more innovation and productivity policy, public and private. So the second key reforms is to accelerate decarbonization and especially our electricity policy, because through renewables and nuclear energy, we can deliver low carbon, sovereign, and low-cost energy, which is much more than importing gas and fossil fuels. Third, we need much more investment based on common budget, and in my view, I mean, based on public reports and figures, we need 1 trillion more in terms of budget, in terms of spending. And in parallel, we have to make the capital market union a reality, which is not yet the case.
Can I come on the capital market union? Because you have here an example. You have BNP.
Yeah.
Now probably Europe's and definitely the Eurozone's most successful bank, worth $80 billion. But you know you are entertaining these people like JP Morgan and so on. JP Morgan is worth $550 billion. It's 9 times as big. Bank of America, 4 times as big. And the reason why is BNP Paribas cannot expand throughout the European Union and take over other banks.
This is very true. We have several issues.
You would like to see BNP take over one of these take over a German bank or an Italian one?
I mean, we do need a consolidation, but we do need as well an actual domestic market as Europeans, which is not the case. We have to deal with 27 regulations. You know, energy, finance, and telco are the key sectors where single market doesn't exist. It was a choice at the very beginning. I do agree that we have now to open this box and to deliver a single market approach. It's much more efficient. So our view is that now we want to elaborate a Franco-German consensus on capital market union to have a single system of resolution, a single supervision, and a much more integrated capital market union.
But would you be happy with, say, Spain's Santander coming and buying Societe Generale?
I mean,
as part of that.
It's part of the market, but dealing as Europeans means that you need consolidation as Europeans.
So it could be cross-border mergers in both directions.
But this one is for banking union.
Yeah.
It's already on track. Now we have to do it for capital market union, which is broader,
more difficult.
and even more difficult. But we started to do so at a political level during the last council, and I do believe that we can find a Franco-German agreement. But why? I want you to just understand the challenge for us. 75% of our financing as Europeans go through banks and insurance. So we need much more consolidation, but we need a clear circulation of the savings all around the place. This is the first objective, to be much more efficient and to be sure that our savings will be invested in the right sectors and the right geographies. Second, every year, 300 billion savings goes to finance the US economy because we are not attractive. So in parallel with this capital market union and the simplification, having an actual single market, we clearly need the same level playing field as the US in terms of financing, which means when you take solvency and Basel, as long as it's not implemented by the US competitors, it should not be implemented by the European competitors. Otherwise, this is a killer for risk-taking, because these regulations just prevent you, I mean, our banks, from investing in equity, which is exactly what we need. And if you take the key driver of this difference between the US and Europe, the key driver is the fact that the US economy innovated and invested much more in equity and innovation than the European.
Order filled.
The French President, Emmanuel Macron, speaking exclusively with Bloomberg's editor-in-chief, John Micklethwaite, at the Palace of Versailles yesterday. To carry on the conversation, think more about the implications of what the French President is talking about there. Anna Stupnitska, global macroeconomist at Fidelity International, joins us now. Anna, you were listening to what the French President had to say there.
Stop, Phil.
If Emmanuel Macron got what he wanted in terms of capital markets union, in terms of the banking union, how transformational would that be for bond markets in Europe? How transformational would it be for the European economy?
I think it would be extremely positive, very transformational, and I can't agree more with him in terms of the change in the model that the European economy needs. It is about productivity, it is about innovation, but also it's about finishing all those unions, banking union, capital markets union, fiscal union, that remains still unfinished. And ultimately, to be able to transform the economy so much, the European Union needs to finance it. It's all about where are you going to get the money from to finance the defense and all the other ambitions that he's talking about. And I think that would ultimately have to result in joint borrowing, which is obviously a controversial issue right now.
If we do this, if Europe gets this right, how much lower would yields be? If we had multiple sources of financing, how much lower would yields be?
Well, it's really hard to say because obviously it depends on the composition of where this investment, where the financing is going, what it means for growth, what it means for productivity, I don't know. It's really hard to say right now, but potentially it would be low from where we are today, because we do see quite a lot of risk premium now, given geopolitics, given the risky transition that Europe is going through.
What is the major headwind right now for the European economy that seems to be on a slightly surer footing, Anna?
Well, I think from a cyclical perspective, we are seeing signs of acceleration in the cycle, very moderate acceleration. Of course, we saw the surprise in Q1 GDP growth, and it was relatively broad-based. It's not just periphery, it's also core, except for Germany. And we expect this to continue through the year. But the main headwind is still that structural change that Europe is going through, and I think Germany is the best example. The energy shock, the changing model of China and that relationship with China, obviously with Europe being so dependent on Chinese demand, geopolitics, obviously the war in Ukraine. So I would say this is a structural headwind, and we are seeing that it is taking time for Germany to adapt. It might come out on the other side in a better place once this energy transition is complete. But for the time being, it is the main headwind.
Okay, so the structural headwinds remain pretty significant for Germany and others within the Eurozone. To what extent would cuts from the ECB offset some of that pressure, do you think, Anna?
It will to some extent, because what we have learned over the past couple of years is that the transmission mechanism in Europe is actually quite strong and quite clean. It works pretty well, in contrast to the US. So as rates rose, we saw tightening in credit conditions. So the transmission worked through the credit channel and hit the real economy. And that's why we saw stagnation or recession in parts of the euro area last year. Now we are going to see the reverse. The ECB should be ready to cut rates in June. Of course, how many cuts they will do depends on the data and also on the Fed, because they can't get too much sort of policy divergence going on. But as they start cutting rates, that again should feed into the credit channel and should help the economy rebound. So we don't expect a huge rebound in growth, but something up to 1% for the whole of 24 is possible if the ECB manages to start cutting rates.
Anna, let me pivot to the US, because I know from reading your notes this morning that you don't expect to see any cuts in rates from the Fed in 2024. Give us briefly why you have that view, but what does that mean for stocks?
I think, first of all, I have to say that there is a lot of uncertainty in the data. We are coming out from this obviously very different period, and what we're seeing is that data is volatile. We continue to see surprises on the upside and downside. There is a lot of volatility. But from what we are seeing in the US inflation data so far, doesn't suggest that the Fed will be soon ready to cut rates and will have the confidence that inflation is moving to the 2% target. So as you know, there's a lot of debate about this, but looking at our own indicators and our own forecasts, we think that inflation will remain sticky and that disinflation will continue stalling in the coming months. So the Fed will not be ready to cut rates. So we are seeing that higher for longer scenario still play out in the markets, and concerns over inflation are not over yet, even though Powell tried to send a dovish signal and ruled out the possible cuts. But we think that those narratives will be coming back in the market. And ultimately, the economy is too strong, the inflation is too sticky for the Fed to be able to cut this year.
So the US faces an economy that's too sticky to allow the Fed to cut, but you do think that the ECB cuts. And you think that they cut a few times this year, I think, and not too far into the future. So this sets up a divergence over quite a sustained period, Anna. What pain does that bring?
Yes, I think this is the major issue, and this is what we are already seeing, obviously, with the Fed repricing. Other central banks have to adjust their path. We're seeing the BOJ under huge pressure, and that's something that we'll probably see for other central banks too. And that's why the ECB could potentially cut 4 times, if not more this year, if the Fed also starts cutting. But because we don't expect any cuts, they might well manage just 2 or 3 rate cuts this year. So yes, even though all the central banks say they don't depend on the Fed, obviously policy divergence manifests itself in currency differentials, and that will put quite a lot of strain, I think, in the markets, and this divergence can go so far. That's why the ECB won't be able to cut as many times as they would ideally want to, and that also means that, again, this cyclical rebound is likely to be quite moderate because of that drag from the Fed that we are still seeing through the year.
Anna, thank you very much. Thanks for joining us. Anna Stupnicka, global macroeconomist at Fidelity International. We're back to that same theme about divergence, about whether these central banks can diverge. And clearly, if you ask them at the sort of theoretical level, then they always want to distance themselves from the idea that they're Fed dependent. But then you can't get away from the feedback. So, if the dollar remains strong, how does that feed then into your economy?
You've got Klaus Knott and Powell sitting on a stage today. It's going to be interesting to see the divergence maybe that exists there between Amsterdam and Washington. But the other factor I would throw in, and the UK is an example of this morning, is the wage data appears maybe more sticky than we're anticipating. Does that pour a little cold water on this idea that we're going to see significant rate cuts? I thought the idea at the beginning as well about kind of if we start to, Emmanuel Macron's idea that we loosen up what happens in Europe and we get a capital markets union, that's going to be fascinating. The US relies on, this is partly why it's outperforming, is the US relies on bank loans, you've got the credit markets, you've got the private credit markets. The sources of available financing for US companies are just enormous compared with what we see over here in Europe.
And the €1 trillion additional budget that he was calling for as well. I mean, hypothetical, obviously, at this stage, and to what extent you get pushback from the likes of the Dutch and the Germans as well. But that brings to question the fiscal support that comes through from Europe in the years ahead as we continue to contend with the need to build out the defence space in Europe, and to what extent that remains supportive. Just going back to what Anna was saying, I guess, I mean, it is remarkable, isn't it? So potentially four cuts from the ECB, with that major caveat, if the Fed goes. Otherwise, you don't get that cover. So the global ramifications of this, and you only have to think about China. You could get an environment where the Fed doesn't cut, and then you have the suppressed nature of the ECB policymaking, and then things like China and the economy there not able to push through fiscal stimulus there because of concerns about the yuan, and all those drivers don't come to the fore. So that's the importance of where the Fed goes.
All interlinked. Coming up on the programme, diamonds apparently are not forever. Anglo-American says it plans to exit its De Beers business as it seeks to fight off a takeover approach from rival BHP. We'll bring you all of the details next. This is Bloomberg.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station. Order filled. To carry my once-a-week show. On average, they all said no 50 years. 50
Order
times.
filled.
I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Welcome back to Markets Today. Happy Tuesday. We are at about 11, 12 minutes away from the cash equities open. European futures pointing to gains of just 2 points so far in the session, but at record highs, of course. In the mining space, the focus is on Anglo-American, planning one of the biggest shake-ups, of course, in its 107-year history. Anglo says it plans to exit diamond, platinum and coal mining.
Order filled.
Seeks to fight off a takeover approach from rival BHP. Let's get more on this story and bring in Bloomberg's Martin Ritchie with the details. Martin, what are the main takeaways then? It seems pretty dramatic coming through from Anglo-American. What stood out to you in terms of their plans going forward?
Yeah, that's right, Tom. It is a major overhaul of this business that's actually more than a century old, as you said, in response to BHP's bid, which is now worth $43 billion for Anglo. Management of Anglo has come out this morning, less than an hour ago, saying they will sell their diamonds business, sell their platinum business, and sell their metallurgical coal business. Now, this is really breaking up the company so that Anglo can focus on what it thinks is its most valuable assets, which is copper, iron ore, and some fertilizer. It means that Anglo is going to be a very different company with or without the tie-up with BHP.
Yes, and so Martin, how is this likely to be greeted by Anglo investors? Some of them have wanted Anglo to show, put pressure on Anglo to show, okay, you don't want the BHP offer, you don't like the strings attached to it, so show us how you're going to create value as a standalone. And this is a drastic proposal.
It does look pretty bold, and it does appear to answer directly some of the concerns that we've heard from Anglo shareholders, and also speaks to why BHP put forward its proposal. Look, Anglo's shares have underperformed versus the rest of the mining sector for a variety of reasons over recent years. It's a very complex company. It's got exposure to some very good assets in copper especially, and that's what attracted BHP. It does look as if Anglo's accepted that and said, hey, you know, this is right. We want to focus a little bit more on copper, and we want to keep that exposure, and we're going to listen to what you know, perhaps some of our investors have said and what BHP is hinting at.
If you're a UK shareholder and you own Anglo, and you probably can't hold directly listed stocks in South Africa, are you going to be happy with this? How is this going to go down with the shareholder base at Anglo? Are they going to be happy to go and proceed with this? I appreciate that it crystallizes value, but in crystallizing value, it may cause some of these funds problems. Is this going to be universally welcomed?
It probably not going to be universally welcomed, no. Look, the South African businesses are a very complex matter for both BHP trying to take over Anglo. It said they will try and spin off or demerge those South African assets before any takeover. Anglo appears to be going a step in that direction as well by saying it will exit from diamonds, the famous De Beers business, and from platinum. So it's still very early days in this kind of titanic mining battle we have. We're waiting to see now what BHP does next. Will it up its bid to try and get Anglo to accept or not?
Yep. I imagine there's a lot of chat about this in Miami. Bank of America conference taking place there. Perfect place, you could argue, to debate all of this. Martin, thank you very much indeed. Martin Ritchie on what's happening with the BHP Anglo story. Maybe it gets widened out. Let's talk about some of the other stocks we're watching this morning. Joe Easton, over to you.
Morning, guys. So Germany's buyer beating expectations today. A lot of this driven by the pharmaceutical division. They're seeing some strong numbers in some key drugs, including in oncology and kidney as well. So the adjusted EBITDA topping analyst forecasts on the main line there. We are seeing a little bit of weakness in the consumer health business. So this is the over-the-counter drugs like Reni and also some aspirin products as well. But that is a much smaller part of the company, as we can see from this pie chart. We love a good pie chart. We can see consumer health is only 13% of the business, pharmaceutical 38%. Crop sciences, that's the big one. This is the business that's been weighed on by concerns around Monsanto and the Roundup weed killer, and worries that that did have negative health issues, and we can see that's been the big weight on buyer stock over the past year, down around 45%, expected to pay out billions in compensation. But for now, some of these pharmaceutical earnings looking pretty good this morning. Then in terms of autos, we got a big potential stock sale. This from Volkswagen, looking to offload shares in Traton, the truck business, according to a Bloomberg exclusive. This is the business that it IPO'd around 5 years ago. As we can see, it is now trading significantly above the IPO price. It's had a bit of a rally recently, given some strength in some Latin American and also European markets, actually outperforming some of the key peers like Volvo and also the Mercedes truck business as well. They're a bit more exposed to North America. So this is a strong one. Potentially VW looking to sell some of that strength. There's the big ones on the screen there. Then finally, also looking at Vodafone today, a perennial underperformer, but today the earnings looking a bit stronger for VOD. They are saying the German business rebounding. There's a little bit of weakness here in the UK service revenue, but they are trying to offload some businesses, including in Spain, potentially meaning we might see some more buybacks adding to earlier this year. But look at that, 5 years down 45%. Most analysts I'll buy those. Keep an eye on Vodafone this morning.
OK, lots to watch. Thanks so much, Joe. Our equities reporter, Joe Easton, with the latest on Stocks in Focus. We'll be back with the market open. We'll take you through what we get there. US futures are entirely flat this morning. We're waiting for the US inflation print tomorrow. European futures are flat. We'll be back with the market open and events in Qatar at the Qatar Economic Forum. This is Bloomberg.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Tuesday the 14th, good morning. Welcome back to the programme. We're a couple of minutes away from equity trading here in Europe. There are actually a lot of single stock stories that are worth thinking about. The macro overlay is that we're waiting for a lot of inflation data, which is going to come later out of the United States. We've got NFIB data as well. Powell's going to be speaking here in Europe a little bit later on as well. So there's a lot of kind of macro stories. But actually, in the moment, there's actually some really fascinating single stock stories this morning, and Anglo absolutely front and centre. As somebody joked earlier, diamonds are not forever. This is a massive spin-off. In some ways, you can argue if they get through this process, they'll be more attractive as a takeover because they'll have done the hard part themselves. But that could take a while, and is BHP prepared to wait?
Yeah, or does it, if they are prepared to do all this hard work, does it encourage BHP back with another offer?
Yep.
So there's a lot to talk about here. I know we're going to be talking to Will Kennedy, our colleague who covers this sector, of course, shortly. So that'll be good. Out of interest, I mean, copper prices are up 2% in Asia as well. So that...
Two-year high.
Two-year high, right.
Above that 10,000 level.
Underscoring the attractiveness of the Latin American, the South American business that BHP is interested in here, and the long-term story around copper has been well made.
The jewel in the crown is not diamonds. It's
nice.
copper.
Very nice.
And that's what they're going for. European futures then pointing to modest gains. It's worth reminding, 1/10%, it's worth reminding, we're 7 straight days of gains across European stocks.
Yep. Look at the FTSE 100. Look at the gains that have been made there. Absolutely sensational. The commodity stocks, to a certain extent, have been driving some of that move, but there's a real catch-up trade on with the UK right now.
It was autos at the top of the list yesterday, along with healthcare. We'll see if that's a trend that continues today. We're also watching the impact on the miners as well on softer iron ore prices, but it's really all about Anglo when it comes to that sector, of course. We are just 8 seconds away from the open, with European futures pointing to very modest gains. US futures currently flat. Let's check in on the markets then, and we'll start with the sector look as well, Guy and Anna.
Absolutely. Let's get an idea of what some of the single stocks are doing. Yesterday, I got caught out because Novo Nordisk was coming off a holiday, 2-day holiday in Denmark, so it had risen. But actually, in terms of the points, it continues to add today. I think it's going to the market with some debt as well. It's interesting that some of the French banks are actually... SocGen is up by 2.23%. Did Emmanuel Macron just paint a little target on SocGen's back? I wonder, in his interview with John Micklethwaite.
He was asked whether he would be comfortable with Santander, as an example, as a hypothetical, making a bid for SocGen in part of that conversation about banking union. So we're seeing a move there. Whether or not ties that to those comments can be interesting. 2.5% gain currently for SocGen. Just Eat, some of the delivery companies as well in focus. Delivery Hero selling part of its business in Asia, Taiwan, to Uber as well. So we watch those stocks. And then we got Bayer. Bayer coming in with some better than expected earnings. They face all this litigation risk, of course, but that stock in focus for us today. Bayer coming in with slightly better earnings print, Anna.
Yeah, in terms of the sector breakdown, we were pretty evenly split yesterday, and today not all that different. I was just looking at the worst performing sector is travel and leisure, but it's the leisure side, if you like, it's the gaming side. Plus, entertainment seems to be weighing down on that sector rather than aviation, which is actually doing okay this morning.
IAG hit a 52-week high yesterday, which is interesting, that it is kind of pulling away from the rest of the pack here in Europe. That's the North Atlantic story,
US exception,
and it continues to drive it higher. But utilities are up again. So this is the kind of the bond proxy trade, which a lot of people are talking about in terms of how you play Europe. You're looking at bond market outperformance relative to equities, maybe, seems to be some of the narrative that's emerging. And if you want to therefore play that narrative through the equities channel, do you play it through the utilities, which kind of fit more naturally into that kind of a trade?
Yeah, I mean, that was a sector that was being, well, so that's utility space. You mentioned the banking sector earlier on as well, and that's in focus after that Emmanuel Macron interview that John Micklethwaite did. I was also looking at the energy names, given that he might have sounded relaxed and even encouraging about cross-border banking M&A, but not so relaxed about the idea that Total Energies might go looking for a higher value over in the US. But that sector is a sector that is gaining this morning, up by around 0.25%.
Yeah.
Total Energies just up by 0.2% in that context.
Anglo barely moving on the back of this pretty seismic news that's come through in terms of the potential restructure there. Just up 0.2% so far in the session. BHP, of course, that continues to court this company, down 0.3%. So far, it seems investors kind of still adjusting to this news about a potential, obviously, major restructuring at Anglo, and they try to derive more value and push back against this takeover bid from BHP.
So go ahead.
No.
I was just thinking, looking at the points breakdown and what's moving on the points basis, and it's your old friend Guy, Novo Nordisk, to the upside. Only 0.7% higher, but obviously it's such a heavy weight that it provides the biggest points gain on the Stock 600 this morning.
So there's an investor call, there's a conference call that's just started. I think it's actually a media call, if I'm being more exact. CEO Duncan Wanblad, this is the CEO of Anglo, is on that call. We'll be taking questions. We'll be answering some of our questions that we've got this morning surrounding what is happening here. Let's dig further into what we're anticipating with our executive editor for energy and commodities, Will Kennedy, who's actually in Melbourne today. So the time zone still working in our favour. Will, your thoughts on what happens here next? In some ways, this clears the way for a takeover, because in some ways everybody's now on the same page in terms of what needs to be done with this business. How does the announcement this morning, which is clearly defensive in nature, change the narrative? They're basically saying at Anglo, we're going to do what they're going to do, but we want to keep the assets, the copper assets, in our own hands. How does that change the story from a BHP point of view?
Morning, Guy, or afternoon from Melbourne. Look, it's a very dramatic response by Anglo, as you've all been saying, and clearly it goes a lot further than some people had been expecting. But how does it change things? Well, look, if you're an Anglo shareholder, you clearly get more value out of this. You clearly are getting a lot of the things that people want, which is to concentrate on the copper, to make the group more streamlined, easier to understand, to get rid of some of the problematic businesses like platinum, but you get it without all the execution risk of a very big M&A deal. And those risks are antitrust, and we all expect that there may be issues in South America. The Chinese might want to get involved. South Africa may be more comfortable with Anglo doing this in South Africa than they would be a BHP forcing their hand. So there are attractions, presumably, for investors in having Anglo's existing management do this. It's a real statement of intent, and the ball is back now with BHP, who are going to have to think whether they want to come back a third time with a higher offer, which just is too compelling for shareholders. And that's what we will be watching over the 8 days or so until this deadline that BHP has on May the 22nd.
OK, so we have 8 days to watch for what happens next then in terms of a BHP response, Will. In the very short term, very little is happening to the share price. Anglo-American, well, it was up by not even 0.1%. Now it's down by not even 0.1%. It's really not going anywhere in a hurry. What would you expect? Does that send us any kind of message, Will, or are we just all still waiting to see what BHP wants to do?
Look, I mean, I think, you know, clearly we're a little way off the offer price, I think. Definitely not a long way beyond it, which suggests that investors remain sceptical, A, whether BHP will come back, and B, whether they can get this deal done. This has always been a very complicated deal to get done for all the reasons we've been discussing over the last few weeks, principally the situation in South Africa. And I think that skepticism remains among many investors, and that's what the share price is telling you. Equally, that probably shows that investors are not willing to give Anglo full credit for this plan as yet, that they want to hear more about it. They want to believe that Anglo can get this done and get it done quickly. So I think investors are a little wary
Stop
about
filled.
management teams right now, judging by the share price.
Will, just if we step back and look at the broader implications for the sector on the back of how this story transpires, how do you see if this deal goes through? Does it spur further acquisitions within the space, or does those acquisitions happen anyway, independent of the fortunes of Anglo and BHP?
Look, I think one thing that you can take from Anglo's reaction to what's happened to their announcement today, which is more dramatic than some of us may have predicted, is that no matter how this pans out in the end, that the mining industry will change because of BHP's approach of Anglo, that the mining industry in a year, in 2 years, is not going to look like it looks like today, that you're going to have a radically reformed Anglo-American. And I also think that, you know, deals are back in the air in this industry. Clearly, people are thinking about how to change their mining portfolios to become more ready for the future. And I think for a lot of companies, that means, principally, as we've been discussing, more copper and less reliance on iron ore and coal. And you're seeing that process play out. Where exactly where the pieces fall remains to be cleared, but remains to be seen. But Rio Tinto, the one big company that we haven't talked much about yet, will have to look at its strategy and think about where it can add copper. And if investors decide to stick with Anglo's management team and their ideas, then BHP will have to think out where it's going to get more copper. So yes, I think we're at the start of a very interesting time in the mining industry, and the next 2 years will be full of stories.
Well, thank you very much indeed for joining us from Melbourne. Our executive editor for commodities, Will Kennedy. Amplats is down pretty sharply in South African trading. That's probably worth noting as well. There is a call that is underway currently with the Anglo management team. They'll be answering questions. So we're going to get more headlines and more detail on this plan that has been put out this morning. The other thing I want to flag is that the QEF, the Qatar Economic Forum, is now underway. The Qatari Prime Minister is now delivering opening remarks. If you want to follow this, you can do so, of course, on your Bloomberg terminal. We will be back there shortly as this event kicks off. But let's get back to the single stock story that we're watching here so carefully this morning. This is what the sensational six look like this morning, the core six, as we probably should call them here in Europe. The stocks that you want to be watching out for to give you an idea of what is happening, just to kind of flag the story. It's interesting that luxury stocks, Ferrari down this morning, LVMH a little softer this morning, and Nestle down. But Novo Nordisk continues to power higher, which is fascinating. It's had a very strong session yesterday. It's building on that today. What else are we watching? Let's go to the delivery business and see what's happening. Joe Easton, what do you got?
So we are starting with deals then, and it is delivery. As you say, we were looking at mining in terms of Anglo, but the big mover is Delivery Hero, up 19% in Germany on news that they're going to be selling their Taiwan business to Uber. Uber moving further into Asia with their Uber Eats business. They have been trying to offload that unit for a number of years, and they are finally doing it today. Though I was reading there is actually some concern around regulatory issues. Will that get approved? That was the take from Bloomberg Intelligence just breaking, but the market is loving that. We're up 19% at the moment for Delivery Hero. Then Tratton coming down. Bloomberg Deals team saying that there might be a big share sale. €1 billion could be offloaded by Volkswagen. That's weighing on that one significantly today, down almost 2%. Anglo, you were discussing there with Will Kennedy, we're ticking up around 0.4%. We'll have to wait. Where does this go from here? Diamonds are not forever, as you've been saying with that potential asset sale. Then SocGen potentially reacting to these comments from Emmanuel Macron to the Bloomberg editor-in-chief. The trader I was talking to today said that SocGen would be the most likely sale target. Probably BNP would be a bit too big, as would Credit Ag as well. So that one seems to be getting a bit of boost on that interview there. Then in terms of some other earnings we've got today, there's Vodafone ticking higher. We have seen a rebound in Germany. The UK still looking weak. We didn't see another buyback. We got Flutter Entertainment down 2.5%. I'm told this is due to strong basketball results, meaning the punters are winning and Flutter is losing over in the US. I know absolutely nothing about that sport, but that doesn't sound good for them. So that is coming down almost 3% now. And then Greggs, we love looking at Greggs because it gives us an insight into what people are eating. It's chicken goujons, it's sliced pizza, all of those delicious lunch snacks. But why isn't it doing well? Well, that stock already trades at 20 times earnings, so that one is actually coming down, giving up some gains. We've also got Sonova. This is in the ear and eye care business as well, and that one gaining 6%. Most of that is in hearing aids. That one's over in Switzerland, and it's up 6% today. We'll quickly look at some German earnings as well. We've got a bunch of them out. It is a busy day for them. Rheinmetall, look at that one, down 6%. This is the defence supplier, the biggest German defence supplier. A massive rally for that one, so giving up gains following earnings. And Nordics in wind energy, rebounding following some of those losses spurred by Donald Trump's comments yesterday. And a couple of others. TAG, this is in the real estate business, just ticking to unchanged at the moment. And Brenntag in chemicals. A couple of weak ones over in Germany today, perhaps indicating something about the economy over there. And speaking of that, we'll quickly look at those UK stocks as well, because we did get that economic data. Wages starting to come down, but still looking pretty strong. But we've already had the Bank of England last week, so at the moment we're not seeing a huge reaction in the banks, in the home builders. Pretty steady across those. Then a couple of morning calls to bring you EQT. This is an interesting one because JP Morgan reckons you should be buying one of the largest private equity listed companies. They go overweight on that one, potentially a rebound in M&A. That is what JP Morgan is saying. That should be good for EQT. And finally, DHL going the other way in Germany is Exane downgrades. This one, they are warning of a potential easing in some of the shipping demand for DHL, and that is a key indicator of the global economy. That one goes to neutral. 43 price targets, trading at 39, and that one's slipping on the DAX index.
Joe, thank you very much indeed. Joe Easton on some of the single stocks that we are covering for you this morning. I want to take you back to Doha. The Qatar Economic Forum is underway. Francine Lacroix in conversation with the Qatari Prime Minister. Let's take a listen. Fran introducing this panel. Let's go straight there. This is Bloomberg.
Well, it's been actually a very long process, and especially in the past few weeks, we have seen some momentum building, but unfortunately, things didn't move in the right direction. And right now,